Welcome to another episode of Trends and Ideas. I'm your host, Isabel Sender, and our guest today is S&P Capital IQ's Director of Exchange-Traded Funds and Mutual Fund Research. That's Todd Rosenbluth, who is here to discuss a new ETF trend. Thanks for joining us today, Todd.
Good to be here, thanks.
Well, tell us, what is the newest trend that you're seeing among ETF providers?
Yeah, within the fixed income space in particular, we're seeing a greater focus on ETFs that have a focus on defined maturities or shorter term duration ETFs. We're seeing a couple of different providers that have been out there launching new ETFs, each with a different year of maturity across the bond laddering profile.
So how does S&P actually rank funds that have less than 3 years of track record? That must be difficult.
So as referenced, we've seen a number of ETFs actually launch, and iShares in particular has launched a series just this year. So S&P Capital IQ does not rank ETFs using the traditional 3-year track record that people are familiar with a mutual fund. What we do is look at the underlying holdings. And from a fixed income perspective, we want to understand the credit quality and the duration of the portfolio in particular. How does that play off of the yield? So as we've seen these new ETFs launch in the last couple of years and in the past year, these fixed maturity, these fixed target date ETFs are a good way to be able to do that, and you shouldn't have to wait 3 years to be able to find one.
Understood. So which defined maturity bond ETF do you want to highlight here then?
So let's talk about the iShares 2016 investment grade ETF that's out there. It's again launched within the last couple of months, but we like it at S&P Capital IQ. It gets an overweight ranking. What you're going to find is it's got a shorter term maturity, as you'd expect, with 2016 bonds inside. It's a relatively low cost ETF, and we think it's a good way for investors to get exposure to ETFs and to bonds that are focused on a certain maturity without having to wait very long. 2016, if you waited 3 years, you'd really be there. So there's no point in doing that. We think it's a good ETF today.
Thank you, Todd. We really appreciate you sharing your views with us. And for more of Todd's ETF research, we encourage our subscribers to read the related Trends and Ideas story on MarketScope.com. It's called Laddering Your Portfolio Through Bond ETFs. Until next time, thanks for watching or listening. I'm Isabel Sender for S&P Capital IQ.